So this morning, positive news on the economy. In the wake of the U.S. agreement with China to roll back tariffs for at least 90 days, Goldman Sachs is revising its recession forecast, now cutting the odds a recession's coming in the next 12 months by 10%. CNN's Matt Egan is here with much more on this. I mean, we're not out of the woods yet. We've got still Trump warning that, it could go back up if they don't reach a deal. But what is Goldman seeing here?
Well, Kate, it's funny. Two things happen every time the president dials back tariffs. The stock market skyrockets and recession fears go down. And that same pattern is playing out right now, right? Yesterday, the market surged.
So you're saying there's a lesson in this?
I'm saying there's a pattern for sure. And look, economists are getting more hopeful that the economy might avoid a self-inflicted recession. So Goldman Sachs previously had said that there was a 45% chance of a recession over the next 12 months. They're now cutting that to 35%, specifically because of this breakthrough between the United States and China that has dramatically lowered tariffs. Now, Goldman Sachs is also upgrading their outlook for 2025. They're still projecting sluggish growth, but positive at 1%. They're also expecting unemployment rate, yes, to go higher, but not as high as previously. They're expecting inflation to go up, but again, not as much as previously feared. And they no longer think the Fed needs to come to the rescue this summer. They think the first rate cut is going to be delayed until December. Now, to your point, the economy is not completely out of danger yet, right? And it's not like tariffs are suddenly low.
Exactly.
They're not. Look at this chart. This is from Goldman Sachs, where they are penciling in the U.S. tariff rate. And look, it is still expected to go basically straight up, still going to the highest level in nearly a century. It's just not quite as high as previously, when basically trade between the world's two biggest economies was paralyzed.
Yeah.
One last point here, though, Kate, I would just stress, there's no precedent here, right? There's no playbook. We don't actually know what happens to a modern economy after going through this many shocks in this short amount of time, but we're about to find out.
That's a good point. There really isn't precedent. You can't really, it's the way, how intertwined the global economy is.
Yes.
And what this means. That's a great point. There is a new analysis, though, on even with the dial backs and the rollbacks, how much the tariffs, the trade war, the ongoing is going to cost Americans.
Yeah, this is coming from the Budget Lab at Yale, and they are warning that, these import taxes are going to eat into household income. They're projecting that these tariffs, the lower tariffs, are still going to cost the typical middle-class family about $2,200 per year. That is lower than their estimate back in mid-April, but still, that is not chump change. That is a significant amount of money, and that's because they're expecting higher prices for a lot of different goods, including leather goods, also cars, auto parts, computers, clothes. All of these things are expected to have higher prices. And yesterday I talked to a small business owner, Bobby Javahari. He owns a California appliance business. And speaking of higher prices, he said, look, they've already increased their prices because of the tariffs on China. And he said that if the tariffs have stayed in place, his company would be out of business.
Well, see, this is important because we just heard the Commerce Secretary saying, don't believe that the tariff is going to be passed along to the consumer and be higher prices. That's just not the case.
Right, and often it will be. Companies have to decide, are they going to eat this? But that might mean they're going to hire fewer workers, they're going to have smaller profits, or more likely, are they going to pass at least some of this along to all of us as consumers?
Yeah. All right, Matt, thank you so much.
Thanks, Kate.
Okay, John.
All right, with us now, Canadian businessman and CNBC contributor Kevin O'Leary. He is the chair of O'Leary Ventures. Kevin, great to see you this morning. So before the weekend meetings in Switzerland, you were pushing President Trump to raise the tariffs from 145% to 400%. You said my advice to President Trump is to squeeze China even more. Put another way, it should shut down trade with China completely. Not only will this force a fast resolution, it will also send a clear message that if it wants to be in the big leagues, China has to play by the rules. To stand up to China means cutting it off, at least for now. It might not be pretty in the short term, but it's ultimately the only way forward. So how upset are you that he backed off and went down to the 35% tariffs, or 30%?
I was advocating for 400%, which was essentially an embargo, a complete shutdown of trade, knowing that the Chinese cannot tolerate that for very long. They have to keep millions of workers working, or there'll be riots in the streets. And at the same time, the U.S. doesn't want that either. The point was to get everybody to the table. I suggested Riyadh or Geneva. They chose Geneva. I'm very pleased that that happened. And we're beginning the narrative. But it's not just the tariffs. This is the first stage, and we're now in a situation where it's 10 and 10 plus 20 for fentanyl. So 30% tariffs in the U.S. of China goods coming in, and they can get rid of 20% of it if they solve the fentanyl problem. That they will do with certainty. But I'm not finished there, and neither are millions of small entrepreneurs in America that I represent. We need IP law to be finally put into place so that our products and services are protected in their markets the way we protect theirs in ours. So a reciprocal playing field is where we need to go. This is a great first step, but it's only the beginning. Bassett said that. They're just starting, and I applaud what they're doing.
What did you get for this? I mean, what did you get for getting China going down from 145 to 30? You say it's a first step, but all you got was more meetings.
You need more meetings because at the end of the day, that's the second largest market on earth. I want to sell to the Chinese people. I have no problem with the Chinese people. I have a big problem with their government. They don't abide by the rules. We've known that for a long time. And no administration has dealt with China even after they came into the World Trade Organization in 2000. They breached every covenant of that agreement with their European partners too. So it's important for us to set the tone in terms of how we're going to go forward with China. We are in an economic war with them. We don't want a military war. But if they want to access our markets, they've got to play by the rules because we still are the largest economy. We represent 39% of all goods consumed and a major customer of China. So while we have that leverage, let's squeeze and get this thing worked out because it's better for both sides if it's reciprocal. And that's the beginning of the narrative we got going here. And one last topic that's coming up in these discussions, at least I hope, is their access to our capital markets is not fair. When I go public on NASDAQ or the New York Stock Exchange, I have to abide by the rules, and it costs me millions of dollars to be GAAP compliant. The Chinese do not comply with GAAP, so why are they allowed to even be listed? I want them delisted until they play by the rules. Keep squeezing until we get a fair playing field.
Well, but you don't have that yet. And I understand you're saying this is just a first step. The Wall Street Journal doesn't think much was achieved here. They wrote, as with last week's modest British agreement, the China deal is much more surrender than Trump victory. Apart from the tariff rollback, neither side announced any broader concessions on the substantive trade issues that weigh on the U.S.-China relationship. Those include China's barriers to American firms, especially in services such as digital and financial, and its chronic intellectual property theft. They have the same issues you do. They don't see any progress here. What lesson do you really think Xi Jinping took from this? Because he's speaking to Latin American countries today and basically continuing to threaten the United States.
Well, I think the job of this administration, and this is a unique administration because none before it have ever tried to negotiate 60 trade deals simultaneously. I mean, that's a huge order, but they're doing it. It's to form a circle of friendship. In other words, are you with us or are you not with us against China? That includes Europe, the UK, which is not a member of Europe, and Switzerland, and India, and Canada, and Mexico. Form that circle of friendship to create a much bigger union between these countries who have a lot to fear about China. China does not play by the rules with Europeans either. They steal their IP, particularly German IP, and I think they're also tired of it as well. By forming this bond, this circle of friendship, which I'm hoping is going to happen here as we go through these trade narratives, we will create a wall of compliance with China. That's what we want. There's never been any consequences for them cheating, ever. So that why, if you're Chinese, you don't even feel bad about stealing IP. I've seen that with my own companies. They run my product during the day and they rip it off at night and sell it back into the US at a 40% discount. That's got to stop. Same thing in Europe. Now, if you have consequences to non-compliance, then all of a sudden, when you squeeze their heads, they finally start to behave. That's what we need.
Of course, there are questions about whether this circle of trust was perhaps blown up that you're talking about. They're blown up by placing tariffs on all these other countries when you should have been bringing them in to battle China. But that's a discussion for another day. Kevin O'Leary, thank you very much. I want to ask you about China and the sudden reduction in U.S. tariffs on China down to 30% from 145%. What do you think Xi Jinping takes away from the machinations over the last 6 weeks?
Well, I think it shows in his case, and I think you can point to several other cases as well, that the Chinese said, you want a trade war? Fine, we're ready for it. And basically Trump backed down. I thought the Wall Street Journal this morning caught it perfectly. It said with respect to the tariffs generally, that Donald Trump had declared war against Adam Smith and lost. And I think that's a pretty fair rendition of it. This is the wrong way to go about dealing with the problem. China is the worst actor in international trade, and it really requires a pretty strong response from the United States. But the way to do that is to go to all of our friends and allies who have suffered the same kind of theft of intellectual property, facing subsidized Chinese companies, never really opening its internal markets. Here's an interesting thought. Get your allies together and go against China all as one group. Don't go to war with your allies the same time you're going to war with China on trade.
Take on Adam Smith, take on the invisible hand. Maybe you get slapped in the face, as they might say.